Pantheon AI presents Markets Rise, Ford Surges, Nobel Economists Warn. Good morning, everyone, and welcome to the PAI Morning Briefing. I'm your host from Pantheon AI, and today is June 3rd, 2025. Hope you're ready to dive into the markets with us.
Absolutely, Host A. It's always a busy start to the week, isn't it? We've got so much to unpack today. From the major indexes and crypto updates to some really compelling stories making headlines.
Couldn't agree more. Let's kick things off with a quick market snapshot. The S&P 500 is trading at about 5,962.85, up by roughly 0.4%. Over on the Dow Jones, we're seeing levels in the 42,449 range, with a modest increase around 0.3%.
And the Nasdaq, always the one to watch, stands near 19,380.03, up by almost 0.5%. You know what they say about the Nasdaq, right? Sometimes it can be as unpredictable as a cat on a hot tin roof.
Haha, so true. Now, for our crypto enthusiasts, Bitcoin's trading at about 106,613.99, up by nearly 0.7%. And Ethereum, not to be outdone, is at roughly 2,626.11, also hovering a little over 0.7%.
Even though these moves might seem subtle, they're part of a broader narrative, aren't they? It's that delicate dance of stability and volatility we just see day in and day out in the markets.
Exactly. And diving a bit deeper into the major market trends, there's been this growing buzz around a slight, almost cautious optimism heading into the trading day. Our beloved S&P index is on the move, even if the gains are modest.
Right. Investors are clearly digesting a mix of corporate earnings, economic data, and global political developments. It often results in the market picking up pennies rather than huge leaps, but hey, small steps are still steps in the right direction.
Totally. It's interesting to observe how investor sentiment seems tethered between that cautious optimism and a dash of concern about trade disputes and regulatory actions that have been simmering. But those slow, steady gains are creating an environment where smart traders are fine-tuning their strategies.
Which is what it's all about, isn't it? Spotting those little nuances before they become headline news. Speaking of headlines, let's jump into some of today's important stories. First up, Jim Cramer.
Jim Cramer, an iconic figure. His piece on Jim Cramer's top 10 things to watch in the stock market Tuesday is creating quite a stir. He notes the S&P 500, after showing resilience with modest gains, might be heading for a slightly lower open today.
So, is this a temporary pause or a sign of more significant headwinds? That's what everyone's wondering. But his list, that might just become your go-to cheat sheet for the day, right?
Definitely. Shifting gears, let's talk about the labor market. Recent reports indicate job openings are on the rise. But despite that increase, there's a noticeable slowdown in actual new hires. It's a bit of a paradox.
It really is. Analysts are debating, are companies hedging their bets in this turbulent environment, or is it a precursor to a bigger economic shift? It's almost like watching a pot that refuses to boil. Everyone's waiting for the heat to turn up, but the water's just tantalizingly below the boil.
What a great analogy. Now on to some corporate news turning heads in the automotive sector. Ford, yes, the iconic name, has reported a remarkable year-over-year sales increase in May, 16.3%.
Wow, that's impressive, especially with rising tariff costs. It comes from their employee pricing initiative, which seems to be resonating. It really highlights the resilience of the auto sector and how strategic pricing can counterbalance rising costs. Gives, quote, driving innovation a whole new meaning, doesn't it?
It really does. Another significant piece of news comes from the academic and economic sphere. A group of 6 Nobel Prize-winning economists has penned a letter expressing serious concerns over President Trump's proposed budget bill.
This isn't just a polite suggestion. It's robust opposition to cuts in vital programs like Medicaid and SNAP. They're warning these cuts could have dire consequences for low-income Americans. It's a reminder that economic policy isn't just about numbers, it's about people.
Absolutely, and those strategies we put in place today will echo for years. Now, let's talk about some nuanced stories that aren't hitting the headlines quite as loudly but are shaping the market's undercurrents. First, tech regulatory tweaks.
Data privacy? Antitrust? The increasing scrutiny is making tech companies tread carefully, even with investors hungry for growth. The interplay of innovation and regulation in tech continues to be a balancing act. It's more about chess than checkers in Silicon Valley these days.
That's a perfect way to put it. In finance, there's ongoing chatter about how shifting interest rates and central bank policies might impact market valuations. Financial institutions are carefully analyzing the ripple effects of any future rate hikes.
Even small tweaks can have magnified impacts on sectors like real estate and consumer finance. It's like assembling a jigsaw puzzle where every piece counts, and missing even one can change the whole picture.
So true. And then there's the energy sector, which has been flirting with some interesting dynamics lately. Oil prices on a roller coaster, driven by global supply constraints and geopolitical tensions.
Right. Energy companies are bracing for both challenges and opportunities. This mix of high drama and cautious optimism is paving the way for innovative solutions in renewable energy. It's a sector that knows how to reinvent itself, like a phoenix rising from the ashes, but with a lot more at stake.
Love that imagery. And looking at the broader global market implications, these domestic stories are resonating internationally. European and Asian markets are closely watching developments in America, especially with trade policies and regulatory changes.
It's a huge reminder that in today's hyper-connected world, a policy decision in Washington can immediately echo in Tokyo, London, or Frankfurt. We really need to adopt a holistic view as investors.
Absolutely. Let's shift to some detailed sector analysis. In technology, that regulatory environment remains a key driver. Companies with a strong track record of innovation may thrive, but those relying solely on aggressive growth tactics might need to rethink their game plan.
Agreed. The evolving relationship between regulatory bodies and tech giants could spark opportunities for smaller, agile players who are quick to adapt. It's a fascinating space right now.
It really is. Turning to energy, the dynamics are equally fascinating. Conventional oil and gas firms grappling with sustainability, while renewables race to capture market share. Investors should eye companies actively shaping the future.
With geopolitical tensions and supply constraints, the energy market's volatility could present buying opportunities for the patient. It's a sector that teaches us the future belongs to those who innovate.
Such a good point. And in financial services, we're seeing a convergence of tradition and technology. Banks are embracing digital transformation, spurred by consumer demand and competitive pressures.
Right. From small community banks to global juggernauts, they're modernizing. But they're also grappling with new risks, like cybersecurity challenges and regulatory hurdles. It's a delicate balance, for sure.
It really is. So what does all this mean for global market implications? It's evident that this mosaic of domestic policy shifts, sector-specific dynamics, and global interconnectedness is creating an intricate tapestry of opportunities and challenges.
Exactly. A policy move affecting tech giants in the U.S. could spur capital flows from Asia or Europe. Geopolitical tensions and trade disputes ripple across every sector, impacting consumer sentiment. Every decision, no matter how minute, could be the beginning of a trend that redefines market dynamics globally.
Fantastic point. As we look towards the future, let's share some insights. First, keep an eye on regulatory developments in tech. There's a lot of uncertainty there. Second, the auto industry, like Ford's sales, shows even conventional sectors can find growth if they innovate.
And thirdly, the broader labor market dynamics remind us that while job opening numbers might be rising, the real test lies in how quickly businesses move from those openings to actual hires. It's not just about the numbers, is it?
It's not at all. Sometimes in markets we find humor in the most unexpected places. I joked with a colleague the other day that even the most routine market correction could be as unpredictable as the punchline of a well-crafted jest.
Haha, if you know where to look, the irony is often all around you. And that's what keeps us on our toes, right? The interplay of risk, reward, and the occasional curveball ensures boredom is never an option.
Exactly. So before we wrap up, some thought-provoking questions for our listeners. How do you see the balance between regulatory pressures and innovation playing out in tech and finance? Are businesses truly ready for a future where digital transformation and sustainability coalesce?
And for those tracking global markets, do you believe the domestic policy shifts we're seeing today will continue to create seismic shifts on the global stage over the next several months? We'd love to hear your perspectives.
Definitely. Let's quickly revisit our key takeaways. The market is showing moderate gains across major indexes, S&P, Dow, Nasdaq, with cryptocurrencies like Bitcoin and Ethereum continuing their steady dance. On the news front, Jim Cramer's top 10 list offers essential cues. and the mixed signals from the labor market underscore cautious optimism.
Ford's impressive sales stand as a testament to innovative pricing, and the strong stance by Nobel Prize-winning economists reminds us of the human impact behind economic policies. Our sector analysis highlighted evolving narratives in tech, energy, and finance.
Globally, these stories are interlinked, and the implications will be felt far beyond American trading floors. As always, we're here to be your information co-pilot, guiding you with clarity and insight.
Keep those questions coming to our AI co-pilot. Curiosity is the engine of progress. What trends are you watching? Which strategy do you think will triumph? Your perspectives are invaluable.
Thank you for joining me on this morning's briefing. I hope this deep dive has provided useful insights and a few moments of levity. Remember, markets can be unpredictable, but with the right information and a dash of humor, we're well prepared.
Absolutely. We look forward to our next conversation tomorrow. Until then, keep analyzing, keep questioning, and most importantly, keep growing. Learning shouldn't feel like a full-time job, right?
Exactly. Have a great day, and thank you again for being part of the Pantheon AI Morning Briefing.
Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.